In this final portion of a video, let's talk a little bit more about how we ultimately get to the tax. So after we've calculated AGI, adjusted gross income, we then have to start to get down to what we refer to as the taxable base. What is the actual income based on? Well, we have some deductions that we can take. The first thing is talked about is a standard deduction. You get a deduction for each person who is a dependent to you. So it's not affected by your income. It is affected by filing status and age, of course, and it's adjusted by the IRS, and these things change from time to time. So in 2015, everybody received a standard deduction listed below here. So if you were married filing jointly, you were given $12,600 to deduct from your AGI to calculate taxes. So everybody is given this deduction, if you will. What happens though if you have more than $12,600 worth of deductions? You can then take what are referred to as itemized deductions. But you start with 12,600. So if your itemized deductions do not exceed $12,600, then you just take the $12,600. If not, you adjust and take the itemized deductions. What are these itemized deductions? There's a whole range of things that could be there. It could be medical expenses, there could be state taxes, local taxes can be itemized, interest expense on equity can be deducted. So all of these things can be incorporated into itemized deductions. They can be added up, and if they exceed that $12,600, you can deduct. Some more of these itemized deductions, charitable contributions can be part of that. One of the things, though, is that some of these have some limitations. Medical expenses. You can deduct extra, more, as long as it is in excess of 10% of your AGI. So if your AGI is $50,000 and you have $60,000 worth of medical expenses, that next $10,000, let me go back. If you have $50,000, 10% of that's $5,000. If you had $7,000 of medical expenses, that additional $2,000 can be used as part of these itemized deductions. But in the end, the idea is if it exceeds, you take those deductions. Most of these things are pretty well identifiable. There's not a lot of gamesmanship that you can play in here, but there is ought to be this sense that you can take more deductions. We also get personal exemptions, and this is where I was going a little bit earlier. You get an exemption for the filer of the reports, their spouse, if they have one, and each dependent child that they have. Again, this is all deducted from your gross income. So you have standard deductions and you have exemptions. So now we end up with taxable income. This is the income less deductions, less exemptions. Now we calculate taxes. After we've done calculating taxes, there is still another adjustment that we'll have to make to our actual taxes that are owed. So you'll hear people talk frequently about us having a progressive tax system. What this essentially means is as you make more money, the tax you pay goes up. So once you find out your filing status, we then have to calculate tax liability. So again, this is 2015, so obviously the table's old, but the process is the same. So how do you calculate taxes? So let's say that you are married filing jointly, right? And let's say that you make $80,450. That means you're on this line right here. And if you're on this line, here's the formula. It's $10,312 plus 25% of whatever's over $74,900. So again, how do we do that? You take take whatever let's make it a little bit easier. Let's make it, you made $84,900. 84,900 minus 74, that means there's $10,000. So it's 10,312 plus 25% of 10,000, which is another $2,500. So you're roughly going to pay $12,812 in taxes. That example of 80,450, if you do the math, if you're single, you would pay 17,656. If you were married filing joint, you would pay 13,499. So the tax that you pay is also based not just on your income, but is also based on the bracket that you're in and how that adjusts over time. There are also brackets for married filing separately and for heads of household. Again, what changes is not the percentages that you pay, but it's the brackets that change. All right, you see 0 to 13,150. This is 0 to 9,000. Oops, I'm sorry, I went too far. 0 to 18,450. Again, here's single, 925. So the brackets themselves change, but the tax per bracket does not change. Once we've calculated our tax, the next thing we can do is look at things called tax credits. And there are several of these. Tax credits are very good if you can get them because they reduce your tax liability dollar for dollar. A tax deduction only reduces the tax to possibly put you in another tax bracket, but it doesn't have the same power as a tax credit. So child tax credit, currently it's $1,000 per child in the household. Again, this is a refund, right, to some low-income workers who might not even owe any income tax. So in 2017, this credit's not going to be allowed to exceed your liability. So you won't be able to get more than what you paid back in taxes. An earned income credit is just used to reduce tax liability for low-income players. And there are all kinds of other tax credits for things like solar power, all kinds of things. College expense credit, you can also get some tax credits for this. There's a Coverdale savings account and the Section 529 accounts. All of these allow you to reduce your tax burden in order to help save money for your child's college education. We'll talk about these when we get to investing and saving and retirement. So again, how does this fit into your financial plan, right? What taxes are currently available to you, right? I mean, what do you have to pay? How can you increase tax savings, right? Frequently, we're going to have, this is not an easy topic, right? The government does not make this simple. They make it complicated. So frequently you may have to use, especially if you have some differing situations, you may have to utilize a tax professional to help you understand how it's going to affect your taxes. So as a general rule, I would say you almost always should ask a tax professional how something is going to affect you with respect to taxation. So obviously you know that it's a very influential part in making decisions. We're going to need some help. I'll see you in another video.